Ladies and gentlemen, welcome back, and I hope you've had a good lunch and a great networking session. For those who are joining us via the Zoom platform, it's great to have you back with us here again today. Now, let's move on to our next agenda for today. I'm sure that everyone is looking forward to the Fireside chat on ESG standards within the Malaysian regulatory context. Please allow me to quickly introduce the speakers for the Fireside chat led by Dr. Yeoh, Senior Vice President and Head for Corporate Governance and Sustainability Regulation at Bursa Malaysia. Followed by Ms. Helena Fung, Head of Sustainable Finance and Investment, Asia Pacific at the London Stock Exchange Group. And last but not least, Ms. Chetna Harish, Director of Climate Change and Sustainability Service at Ernst & Young Consulting. Ladies and gentlemen, the floor is yours.
Thank you, Israel. Very good afternoon, everyone. Distinguished guests, ladies and gentlemen. This segment of the forum, we will be focusing on the ESG standards within the Malaysian regulatory context. Now, first, a quick round of introduction before we begin. My name is Dr. Yeoh, and I lead the Corporate Governance and Sustainability team here at Bursa. And the team is tasked with the enhancement of ESG-related disclosures as well as practices for all PLCs listed on Bursa. I have with me two esteemed panelists. The first one is Helena Fung, which is the Head of Sustainable Finance and Investment for Asia Pacific at the London Stock Exchange Group. Now, Helena is responsible for the development of LSEG's sustainability products strategy, as well as engaging clients on the integration of sustainability into investment decision making. We also have Chetna Harish, currently the Director of Climate Change and Sustainability Services at EY Malaysia. Chetna has vast experience in sustainability consulting and advisory. And she is also an expert in assisting companies in coming up with their decarbonization strategies. So welcome both. Thank you for joining us. Now, when we talk about ESG standards within the Malaysian context, most people will tell you the first thing is Bursa Malaysia's Sustainability Reporting Framework. Now, this is because all Malaysian PLCs have to adhere to our sustainability reporting requirements. So this forms the primary basis of what to expect from all PLCs disclosure-wise. Given the diversity of the audience today, I think we need to do a bit of context setting. So therefore, I'm going to go through Bursa's framework very briefly. Don't worry, just a few minutes. And especially focusing on the enhancements that we have rolled out, because this sets the bar and also direction of what all PLCs must disclose in the coming years. Then, on a related development, when you talk about ESG standards, a lot of the stakeholders also make reference to the FTSE for Good Bursa Malaysia Index, because from 2014 till now, a lot of the Malaysian PLCs are being assessed on the quality of their management of ESG issues based on FTSE Russell's transparent methodology. So after my presentation, Helena will take the floor and to cover this aspect. Last but certainly not least, we will have Chetna coming to share her insights on TCFD recommendations, because this forms one of the key expectations on PLCs moving forward. Bursa has mandated TCFD aligned disclosures for all main market PLCs moving forward. And it is also currently the most widely accepted framework for climate-related disclosures worldwide. So then we will end the session with a brief Q&A session. Okay, let me start. Malaysia's ESG landscape has evolved significantly in recent years. And one of the main catalysts for this is the rollout of Bursa's Sustainability Reporting Framework, all the way back in 2015. Now, currently, all Malaysian PLCs are required to produce a sustainability statement within their annual reports. In it, they're supposed to provide pertinent information about how PLCs are managing their material sustainability risks and opportunities. Now, this is inclusive of the sustainability governance structure that they put in place, as well as how they identify, prioritize, and manage key sustainability themes. I'm sure you all have heard it before: climate change, anti-corruption, human rights, all of this. We would like to know how the PLCs have identified, prioritize, and manage them. Now, our framework is inherently flexible because each PLC is supposed to undertake their own materiality assessment to determine what's important to be reported. Now, this inherent flexibility is great because each PLC will then report and adopt practices that are best suited for their respective operating context. Now, we are very happy to see and observe significant improvements in the depth and quality of sustainability disclosures in recent years. But even so, new challenges have emerged. Now, for instance, since our framework is really flexible, each PLC has their own methodologies that they have adopted and their own approach. Now, this is a problem for investors because it is very difficult to do like-to-like comparisons and benchmarking. Hence, we see the need to enhance the degree of standardization and comparability. Now, some PLCs also have been a bit naughty. They are not prioritizing certain material themes that should be critical to all. For instance, climate change. So there is also a need to enhance or improve the availability of certain information within their sustainability statements. So therefore, in response, the exchange undertook a comprehensive review of our sustainability reporting framework in order to address the heightening informational needs of the PLC's key stakeholders. Well, we're very happy to share that, of course, we have launched the enhanced framework last September. Apologies. I have to move the slide. Okay, so what are these new requirements? Very quickly, for all main market PLCs, Bursa is mandating a set of common sustainability themes and indicators that we deem to be material for all PLCs, regardless of size or sector. As you can see, all of the common themes that you normally see in sustainability statements: anti-corruption, diversity, energy management, labor practices, supply chain management, etc. Now, I would like to direct your attention specifically to emissions management. This is critical because we want PLCs to start measuring and disclosing their CO2 emissions. And in doing so, hopefully they will devote more attention to reducing their carbon emissions and ultimately to commit to achieving a carbon neutrality or net zero. Now, disclosing, measuring emissions is only one small part of the bigger jigsaw puzzle. So what we are requiring them to do is to provide more comprehensive disclosures that are aligned with the TCFD recommendations. So you can see the four main pillars of TCFD, governance, strategy, risk management, metrics, and targets. Because we want stakeholders to have a clearer view and insights on how they are managing critical climate-related risks, as well as how they capitalize on unfolding opportunities. So come 2025, all main market PLCs will have to do TCFD-aligned disclosures. Now, what else is installed? Well, we also require 3 years worth of data for every single indicator that they report throughout their sustainability statement. Because we have some complaints saying, it is very difficult to look at longer term trends if you only have a single data point. So this is the new minimum, 3 years worth of data for every indicator. and also the disclosure of performance targets if there are any. Now, speaking about performance targets and also indicators, a lot of the stakeholders are saying it is quite difficult to extract data. Because in order to extract data, I would have to read through your 50, 70, 90 pages of your sustainability statement. So we've heard you loud and clear. So what we require now is a performance data table, which is a summary data table at the very end of your sustainability statement. So it's all of the data in one place that you can easily extract. And of course, we can extrapolate this to, CC's solution, which is the data platform. So all of this forms our comprehensive approach to solving stakeholders' problems when it comes to sustainability reporting. And of course, the last thing, to address concerns of greenwashing, we are now requiring the statement of assurance, which means every PLC must state whether they have subjected their sustainability statement to an assurance process, be it internal review or external assurance. Now, this is to address greenwashing, but also to enhance the robustness of the data reported. Now, I'm going to end by saying all of the enhancements that we have introduced is really to prepare our PLCs for what's to come. Let me give you an example. All of the Malaysian financial institutions, banks, insurers, asset managers, they are now incorporating ESG considerations into their lending and investment decisions. And Bank Negara, all of the FIs under Bank Negara will be required to make TCFD disclosures themselves by 2024. So very soon, the financial institutions will come knocking on your door, be it PLC or SME. We have to provide those sorts of data. So our reporting framework, PLC-wise, will put them in good stead to address such informational needs. Then you also have international developments, such as the EU's Carbon Border Adjustment Mechanism, which is basically a carbon tax. Now, if your goods imported to the EU has got, carbon-intensive activities and emissions attached to it, you have to pay a carbon tax. So the choice is clear: decarbonize or be at a competitive disadvantage. So what we want to do again is to ensure that our Malaysian companies and our country, being a trading nation, will preserve its competitiveness, remain integral parts of global supply chains, and not locked out of certain markets. So this will be instrumental to achieve that. And of course, from a reporting perspective, everyone knows, in this space, that the International Sustainability Standards Board is due to publish their sustainability standards soon. And this will form the new global minimum baseline for sustainability disclosures. Now, it's very important. ISSB, everyone's conforming to one global standard. And what is the core architecture of this? It is the TCFD. So I repeat, ISSB standards, the core is the 4 pillars of TCFD. Now we're requiring our PLCs to do TCFD. If you can do this for climate change, you can do this for all other material sustainability themes. So all the intention is really clear. In time, they will fully conform to the ISSB standards. So just as a wrap up, the key takeaway to this is that whenever you talk about ESG standards within the Malaysian context, the main frame of reference should be Bursa's enhanced sustainability reporting framework. So now I will also tell you that the other half of the conversation, if you like, global best practices standards. This is where our FTSE for Good Bursa Malaysia Index comes in. And to tell you more, I will pass on the baton to Helena here. Over to you, Helena. Thank you.
Thank you, Ken. Good afternoon, everybody. Thank you very much to our Bursa colleagues for inviting me to speak to you this afternoon. And I'll just start by saying it's tremendous to see business, finance, industry all coming together in one room to talk about the implementation of ESG. So I think that's tremendously heartening. And I think, Ken, the information that you've just delivered is a great segue into the addition that I'd like to bring into this conversation. There are two main points that I want to bring out in my short sort of speech this afternoon. The first is to sort of step back a little bit and look at FTSE for Good and what we've achieved since 2014, together with our Bursa colleagues in the Malaysian market, and how this really provides us, an entryway into helping to scale the ambition for Malaysia, for elsewhere, as you heard this morning. I mean, this is certainly Malaysia have been incredibly instrumental, and our colleagues at Bursa, particularly so, in challenging us to really help corporates on this journey, but also in thinking about how we can bring this together with international standards and to make this much more of a network. You talked, Ken, about the requirement for comparability, for standardization, and that's so critical and important for the users of the data. And one thing I want to get onto a little bit is the use of the data itself, and the way that we're seeing this being put to work beyond the sort of traditional ESG integration use case that I think we're all very familiar with. So what are the new drivers here, and how are we going to deploy this data that's deemed to be so critical in achieving the outcomes that we're all collectively looking for to help decarbonize economies in Malaysia and beyond? So stepping back a little bit, as you said, we started in 2014 with the launch of the FTSE for Good index. Now, obviously for that, we need to collect a lot of data. We need to bring a methodology to bear so that we can collect the data points that then feed up into the ESG scores on which the index is predicated. Now, we started that nearly 10 years ago, or 8.5 years ago. And at that point in time, there were 24 constituents that qualified as being eligible for the index. Over a period of time, we've now got that to 97 constituents. So you can really see the level of ambition, knowledge, and I think understanding and awareness of ESG that has been driven through the Malaysian markets. I think at the last rebalance in December, we had 21 new constituents coming into the index, which is really tremendous, and I think demonstrates that level of capacity that's been built here in the market. And I won't go in specifically to the methodology for FTSE in great detail. I think we've done that in quite a few sort of earlier sessions that we've run together with our Bursa colleagues. Safe to say that it is, as you said, transparent. That's certainly the objective of it. But it's also built on a number of international best practice, best-in-class frameworks across the 14 different themes that you may just about be able to see set out in that little burgundy circle diagram. So we're really looking at bringing together what are the key international frameworks, and to have that very sort of objective understanding of how you can interpret and actually put ESG into practice in a business context. Now, the next element of this is scaling that up. So we started with the FTSE Bursa Malaysia EMAS universe, which, as it says on here at the moment, is 261 constituents from across small, medium, and large cap companies listed on Bursa. The ambition really now, as you will have seen, or may have seen announced last November, is that all companies that are listed here will have a rating, will be able to track and understand their performance on ESG, will have access to the rating, to the methodology, to the indicators, so that they can all understand how they're being assessed against that sort of, I guess, international level criteria with some level of localization around things like corporate governance, gender disperse on distribution on boards and at the executive level as well. So there is an element of localization, and I mean, talking about your standardized data points, obviously that is tremendously important, as much as bringing to bear the best-in-class international methodology that your stakeholders globally as well as locally are going to expect to see. Now, the third part of this is really to scale that up. And you've heard this morning quite a lot about a platform that London Stock Exchange Group and Bursa Malaysia are partnering on. And we're very pleased to be working with Bursa in this context to really help to bring the tools that are going to be significant in driving forward transition and to meet the objectives and the goals that we have internationally, but also on an economy-wide basis for decarbonization. Now, a lot of that is going to be predicated around ensuring that all companies will have access to the ability to do things like measure their carbon emissions or their GHG exposure across scope 1, 2, and 3. And we recognize that some of these elements can be really challenging for companies. And it's very important that as we bring in, that as new methodologies and requirements are brought in, that technology is made available so that companies are able to respond to new and let's say more demanding standards of reporting and disclosure. But that also we understand that data isn't an end in itself. It's a means to an end, if you like, right? So I talked about the use cases and how this data is being deployed, who's using it. Because I think originally this really came out of an investor requirement to integrate ESG from a perspective really of risk management. I think what we're seeing now, and this is why, as I mentioned, it's so great to see sort of, I guess, an ecosystem, if you like, in itself in this room, is that there is a requirement for banks, for financing companies to start to think about how they can incentivize, but also help to guide their corporate stakeholders in implementing strong ESG management. We've talked about climate, I think, quite a lot this morning, and it was mentioned that we're going to be starting with climate. And Ken, you just talked about TCFD quite a lot. Maybe if I go on to the next slide. You also mentioned the ISSB, and I'd like to pick up on that and just give people an idea of what's coming and what they can expect to see. So from a standardization perspective, obviously that level of comparability, consistency becomes very important. TCFD itself is a framework that requires implementation. And I think we've seen TCFD since it was released in 2017 become the gold standard, if you like, for climate reporting. But we also see, as we look across different reporting frameworks that companies have put into place, that actually there are different ways that TCFD in itself can be interpreted and implemented, and that some of the measurements that companies are bringing, and investors also who are reporting against TCFD recommendations, don't necessarily aid by themselves that level of comparability. The ISSB, the International Sustainability Standards Board, has therefore been through a process of consultation with a large number of global stakeholders to bring to being a framework that will aid the implementation of sustainability reporting overall. But they will start, as we will with this platform, with climate reporting as probably one of the most pressing sustainability issues that we are, I think, globally engaged on. So just a snapshot here of what you can expect to see with the ISSB, which will need to be implemented on a regional and a localized basis. But they have said that the focus is going to be on really financial related disclosures. So your climate reporting should be delivered at the same time as your financial reporting, with a view on what will impact long-term material value. And that question of materiality becomes very important. And the concept also of double materiality, which means that a disclosure is material if it is significant from an impact perspective. So in terms of people, planet, and environment, and your stakeholders, employees, customers, and so on, but also from a financial perspective. So there is that very important double materiality criteria here. But the objective of ISSB will be to create a global baseline of sustainability reporting standards, so that we do have that sort of similarity cross comparison in terms of the actual indicators themselves. And a couple of things to call out here, which I think will be addressed as we roll out the platform that we've been discussing, which is, as I said, the requirement for reporting on Scope 1 to 3 GHG emissions in line with the GHG protocol, and also requirement for climate-related scenario analysis as well, which I recognize, and Chetna will be very familiar with this, can be challenging for companies that don't have access to necessarily the tools or the resources at the moment. So in short, I mean, that's really what we're aiming to add on. I'm going to, just before I wrap up and pass to Chetna, respond to one of the questions that came up this morning, which was about themes and how those would be added. So as I said, we are going to start with climate as the most important theme. ISSB themselves have said that they will be adding biodiversity. That will be next in line to come as maybe one of the next most pressing issues that lends to financial stability, if you like. And then beyond that, they would look to bring frameworks for a broader range of ESG issues. And similarly, as I said, we'll start with climate change. We recognize the significance and also some of the challenges around biodiversity as a reporting requirement, and the importance of the GRI standards as well. So this is really a work in progress, really aimed to support corporates in their reporting journey, but also aiming at really sort of linking up the ecosystem and helping to make the data itself very useful in practice as well. Stop there.
Right. Thanks a lot, Helena. I think I've got a comment here before I pass on to Chetna. When you look at the ISSB, the key standard that you need to be looking at will be the first one, which is the general requirements. Because all of the subsequent standards will be very theme specific. So climate change, biodiversity, all that. But if you think about the pace of how the standards will be issued, S1 will be the mother standard for many, many years to come. I repeat, S1 is if you do not have a specific standard, you fall back on S1. So imagine now we've only got 2 standards coming out in June, which is climate change. Anything that's not climate change, you go back to the general one. So that's why I would urge everyone to pay close attention to S1 before anything else. And if you can conform to that, then you can move on to the more specific requirements within S2, S3, S4, and so on and so forth. But I digress. Sorry. Now, Chetna, you're on next. Thanks.
Good afternoon, ladies and gentlemen. First and foremost, thank you for having me here. It's been a pleasure. So I think Dr. Ken has talked about the requirements, right? How Bursa is paving the way for the Malaysian market to step up in relation to their sustainability management and also climate-related management and disclosures. And then we had Helena talk about FTSE for Good, how the standards are also looking at all the different ESG themes and encouraging the standardization and the transparency in this reporting. So a lot of times companies will start saying that, yes, I'm doing great in my reporting, but how does that translate, right? And that's where the ESG ratings come in. But then again, taking a step back, right? Question is, how really is the corporates doing, right? There are a lot of challenges that they look at when it comes to sustainability reporting, TCFD reporting, etc. I just wanted to, as a brief, take you through some of the things that's happening globally. So we've done a number of global surveys, right, at the global level. And what we've come to see is that, yes, ESG is the top of the market. At the same time, the granularity of the focus, there's a deeper dive now in the related environmental and social matters. So it's no longer surface level anymore. Nobody wants to know that whether you're doing ESG or not. Everyone is expected to do it. It's business as usual to an extent, right? So question now is, how do you step up in relation to your management as well as your disclosures? So in the surveys, as part of the outcome, top 3 threats to success, to the strategic success of companies were identified to be climate change, talent, people issues, which we are all having a big concern and a big issue within the sustainability space. And of course, the geopolitical turmoil, which we see across the globe. So these are the 3 key things. And now on the flip side, on the investor side, everyone is starting to utilize ESG disclosures as part of the investment decision. So echoing what Dr. Ken and also Helena has been talking about, this is already a business as usual. At the same time, 78% of these investors say that they recognize that companies should now start looking at making investments in ESG issues, even if it reduces profit in the shorter term. So there is that little balancing act that you need to do when it comes to investment decisions now in relation to ESG. Okay, so this is just to frame everybody in relation to what is out there, what's happening in the market. I will not talk too much about the framework itself because Dr. Ken has already taken you through and you should already be familiar with this, right? It was launched back in 2017, and at the same time, Bursa has now made it mandated for 2015 onwards. At the same time, So you have two key regulations happening, one for the FI and one for everybody. So for the financial institutions, BNM has also set out the principles and requirements on climate risk management and scenario analysis, for which they need to report 1 year earlier than the rest of the companies, right? So as Dr. Ken said, they're going to come knocking on the door. Yes. At the same time, they need to report before you report. And that is the key challenge for them. The other two, I think you should be somewhat familiar with the Bursa's updated requirements, as well as the additional guidances that is being rolled out by BNM and JC3 to assist and aid the financial institution in adhering to the requirements of TCFD regulations and recommendations. Now, TCFD, yes, has been gaining traction across the globe. TCFD supporters has increased 500% from 2018 right up to 2022. Interestingly enough, out of that entire population of 3,000 over companies, we have 38 companies from Malaysia. And 23 of them have just embarked or have just signed up as supporters of TCFD in 2022 and 2023. So you can see that there is a huge uptake just in the past 2 years, right? And it's good. It's a start. And we're hoping to see much more going forward with the mandation of the climate-related reporting. Okay? So you can see on the right-hand side, these are all the companies that you're already familiar with. The likes of Gamuda, Sunway, Bursa, Securities Commission, Inson, etc. These are all the different companies that have already signed up as supporters of the TCFD. Now, let's move into something a little bit more interesting. Okay, so EY produces a global climate risk barometer on a yearly basis, right? So we analyze 1,100 companies by large market caps across 47 jurisdictions. So what we wanted to do was to give you a flavor of where TCFD adoption lies within the global market and how is the Malaysian market and the Southeast Asian market doing in relation to it. So looking back at the analysis that we have on the screen, you can see that climate strategy disclosures have seen the most improvement in terms of scoring, up to 42% from 38% in 2021. At the same time, we have 61% of companies having put out decarbonization strategies, meaning to some extent, they have figured out what they want to do in this transition towards net zero and a low carbon economy, right? And then last but not least is the most critical, and I would probably say one of the most difficult areas that companies are going to start to have to overcome from a challenge standpoint, right? 29% of companies have started to report on the impacts of climate change in their financial statements. And this typically translates within the notes to the financial statements as a narrative. It's a qualitative financial impact disclosure within their financial statements. So this is the part that most of the time, the Malaysian market have yet to move towards, whereas the global market has started to look at the financial impact measurements. Now, in overall, there's two key areas that we analyze when it comes to TCFD recommendations adoption. Number one is the coverage of the TCFD recommendations. So you have 11 recommendations. Do you cover all of those coverages? And second is on quality. So what we wanted to highlight was that the coverage of the TCFD recommendations have jumped from a mere 70% in 2021 to 84%. And you can see that it is quite consistent across all the 4 teams, from governance to strategy to risk management and metrics and targets. At the same time, when it comes to quality, there's been some changes, there's been some increases, but not very significant. So whilst companies are adopting TCFD recommendations, there is a lot of space and areas for improvement in terms of quality of reporting. Moving on to the next area. So we wanted to take you through market focus a little bit, right? Where are the markets doing the best at this point in time in relation to TCFD reporting and management? So as you can see, The ones that are leading the way are the UK, Japan, South Korea, and Canada. And this is quite consistent even with the results from last year. Why? Is simply because they have strong climate disclosure regulations. 1. 2, proactive investors that are lobbying for climate change impacts. And number 3, a clear signal from policymakers in the direction of these regulations and reporting. So these are the key drivers that we have seen and we've analyzed across this jurisdiction. And we're hoping now with the TCFD being mandated, we will see some similar trajectory in increase and growth in the Malaysian market as well going forward. So as you can see, right, there's a triangle there that shows you the Southeast Asian market. We're going to drill down a little bit, but as you can see, Southeast Asian market is somewhat lagging to an extent when it comes to these disclosures, both from the coverage standpoint as well as the quality standpoint. And last but not least, I just wanted to pull out some of the results of this assessment. So of course, because it's a global barometer, we had selected market caps being analyzed across these different jurisdictions, and Malaysia is slightly higher in terms of the reporting, leading the Southeast Asian market in essence. Okay, and last but not least, before I hand it back to Dr. Ken, I just wanted to summarize 5 key challenges that the corporates will or is currently exposed to that they need to overcome. First thing is data, quality of data, reliability of data. Second is the assumptions that comes into consideration and the future uncertainties when it comes to climate modeling, climate scenario modeling, because you are looking at a 2050 time frame. That is the 25 years to go, right? There's so much that can happen in this 25 years. Thirdly, resource. Do you have the right capabilities within the organization to embark on TCFD? Fourth, are you also dissecting the silos within the organization? TCFD is everybody's business. ESG is everybody's business. It's not confined to the sustainability team alone. And last but not least, disclosure. How much do you put out from a confidentiality standpoint? That balance needs to be there. And with that, Dr. Ken, I pass it back to you. Thank you.
Thank you, Chetna. Absolutely fascinating. The numbers are really scary. 38 who has signed up, but we need to get 600 plus to the finishing line by 2025. So I'm going to throw the question back at you, not to put you on the spot, Chetna, but some people say governance put in place first. Others say identify climate risk before anything else. While some other people are saying, no, come up with some rudimentary strategy and then you will figure things out as you go along. So what practical advice could you give based on all of the experiences that you've accumulated doing that study to all of the PLCs who are just starting out on this journey?
Thanks, Dr. Ken. Very important question, I suppose. Okay, so in my experience, I would say governance comes first. Why? Is because let's say you identify your climate-related risks and opportunities, right? Who is going to take the ownership of it? That's going to be the bottom line, right? When you fix your governance structure, you identify who does what, which departments within the organization is going to be roped into managing climate and ESG, right? And then you move on to look at your climate-related risks and opportunities, identify what's important to you, prioritize first. And thirdly is looking at your emissions. You can only strategize once you know your exposure. If you don't have your baseline for your emissions, what's the strategies that you put out may or may not be impactful. You wouldn't know. But having a clear baseline, identifying your hotspots within the organization in relation to where is it that I'm producing the most emissions is where your strategy will need to focus upon. And that will be very critical for organizations.
Thank you. Couldn't agree more. That's why we're asking for emissions disclosures first before full-on TCFD in 2025. Now, circling back to Helena, can we have practical insights on what are the main constraints or the drawbacks or gaps that are preventing PLCs from making it to the FTSE for Good Bursa Malaysia index. So if we know the main problems, then we can remove those roadblocks if we could.
Thank you, Dr. Khan. Thanks for the question. And maybe I'll pick up a little bit on what Chetna was just saying about implementing governance first. Funnily enough, we do see that Malaysian companies are particularly strong on governance. Now, I think that's because through listing rules and through other regulations here, actually you've put in place already a very strong framework, not necessarily relative to climate change management or with a specific sort of environmental, let's say, agenda in mind. But certainly, if you look at things like the amount of women on boards here, Malaysia has really shown some clear leadership in some of these issues. So I think from a governance perspective, we see that companies do particularly well, but it is the climate change element that we see companies can do more on. So I think from that perspective, this is a particularly relevant discussion for us to be having. I mean, I would maybe pull out a couple of things that we see companies could be doing more of, and I think that's around things like setting targets across different timeframes, measuring their Scope 3 emissions. We don't see that on a consistent basis. For example, linking executive pay to the achievement of certain targets, so quantifying that. So I think there are a number of different things. Now, for those companies that are rated at the moment, they can access the FTSE for Good methodology on a separate portal, and that would give them a very good insight into what more they can do. We tend to also see companies focus on those issues to which they may be particularly exposed, but that means that there can be others where they're perhaps not performing so strongly. So for some of the companies here who are particularly impacted by biodiversity, we see them take action there, but then they're not necessarily, that doesn't necessarily cut across to other issues like environmental risk management as a whole, environmental supply chain, and so on. So it's really about kind of looking across the board at the issues and also building on the base, if you like. I think we see a number of companies are familiar with the framework of TCFD. So they're starting to put measures in place, but maybe not getting to kind of the upper stages of ambition and doing maybe some of the more sophisticated requirements there.
Yeah, thanks for that, Helena. What are some of the potential solutions that we can look to bring us improve sustainability reporting?
Yeah, perhaps I can reiterate some of the things that have been said already about the access to tools, methodologies, consistency. I mean, we talked about ISSB and about having some very, consistent, quantifiable frameworks. I think setting that level of expectation, being very clear about what companies need to do, and then having them work with different stakeholders and different touch points. We talked about banks, we talked about supply chain this morning. And I guess the rationale for all of this important information that's being put out. I think the incentivization piece is certainly important, so that companies don't feel they're doing it in a vacuum, but that it is something that can be beneficial. But I think, just firstly, being very clear about the expectations. Secondly, enabling and empowering companies to be able to respond to those. And then thirdly, having that piece about linking this up with the ecosystem, with the different stakeholders that they're engaged with. Hopefully in combination, that's going to help to move the needle.
Excellent. I think we've got time for one last question. And I think this should be directed towards Chetna because it's about assurance. Chetna, what is the current uptake of assurance that you see based on your interaction with Malaysian PLCs? And where do you see the trend going?
So before anything that Bursa released, we saw a number of companies who have been assuring their disclosures year on year, and majority of them were from the telco industry, as well as some of the oil and gas industries, right? And of course, some of the agriculture industry as well. So these were some of the bigger boys that were already looking at assurances. Henceforth, after the release of the guidelines, we have gotten a number of requests, right? And that's only natural because companies need to be seen to be credible in the disclosures. There are a number of disclosures that we have worked with companies, and we have seen when we review reports that there are a lot of retrospective restatements. And one can only think or try to figure out why these retrospective restatements are happening. But really, I think we know the crux of the matter. Everything is done pretty much manually in organizations. For your financial information, you have a robust system in place. When it comes to ESG, that's the bigger question. Now, companies need to start looking at digitalization to help with the credibility of solutioning and the disclosures that you have in order to ensure your disclosures and especially your emissions disclosures that's going to be utilized by so many people in the market. Your scope 1 and 2 is the scope 3 of another person. So this is really where the task is for everybody to start looking at assurance or pre-assurance to ensure that when you do assure your information, you don't have any roadblocks or qualifications.
Thank you, Chetna. Ladies and gentlemen, I'm afraid that's all the time that we have. I hope you found our discussion insightful. Thank you very much. Cheers.